Now, in the last few weeks, one of India's most successful dot-com entrepreneurs and investor at Matrix Partners, Avnish Bajaj, set up a tweet storm of sorts where he was very worried about the amount of cash that internet companies are burning and about how a lot of entrepreneurs haven't adjusted to the new normal. We have Avnish Bajaj on the show today to outline just what is worrying him and, more importantly, why now. Avnish, thank you so much for talking to ET Now, Startup Central. I want to start with, the tweets over the last few weeks about the levels of cash burn, how entrepreneurs haven't internalized the new environment. I mean, why these tweets and why now? What's really making you worried?
Yeah, so I have actually not been saying it only for the last few weeks. If you look at my Twitter feed, the first time I said it was in August. And frankly, I'm happy to go on record to say I was about to say it in June, but some of my companies were at that time raising money, so I didn't want to really go and talk about it openly. So the reality is the fact that this was at an unsustainable level was actually clear a while ago, but the fact that the tide was turning became clear, I remember, on June 12th, because on June 12th is when the Chinese market crashed quite a bit. So this has been going on for a while. The fact that the environment is turning, all of that, we have been telling our companies for the last 9 months, not just for the last few weeks. The comment in the more recent past is based on the realization that I'm finding stickiness in views of entrepreneurs, which is inaccurate. So, which was the comment around $1 million plus burns. So we've actually run an analysis. And if you run that analysis, you net reach the conclusion, and we ran the analysis of how many companies raise money below $10 million, $10 to $25 million, 25 to 50, 50 to 100, and 100 plus. And what you will find is that the last 18 months was an absolute aberration. It is never going to happen again. And even if you draw parallels with China, what you will reach, the conclusion you will reach is that 10 to $25 million rounds will increase in India. But this 50 million plus, $100 million plus, private IPO rounds are not going to be happening. So the comment is therefore in that light that when you talk to entrepreneurs, and it's not our entrepreneurs, I'm talking about people in general, I often find people saying, my burn is only 1.5 million. Oh, that's a very high burn. That's not only, right? So that was the context of that comment. So companies really need to have a reality check of steady state funding environment rather than draw conclusions from the previous 18 months.
Avnish, there's no doubt that burn rate is the hottest topic as far as the startup universe in India is concerned. But I wanted to ask you, this is Krishna here from India's Mumbai studios. You've built and sold companies during both the boom and the bust cycles. Is it different this time around? Because the market potential is huge. Mobile internet is only going to go up from here on, isn't it?
Of course. No, you're preaching to the choir. I mean, I have been negative on mobile internet until about 2011, 2012. So the factors are different. We have a real market. We are going through a phase where there is going to be a multiplication of mobile internet users and the market at scale, which only happens once in the lifetime of a country. Now, again, if you draw a parallel with China, that happened in China between 2006 and 2013 and created, about $100 billion companies. We absolutely believe we are in the middle of that. So don't get me wrong on that. The issue is everybody figured that out. And when everybody figured that out, they got too excited. So you still have to follow the normal company building processes. The unit economics still has to work. That's the context of the comment. Now, again, even in China until the recent 2 years, a number of the vast majority of the multi-billion dollar companies were created in a very capital efficient fashion. That's what's broken here, right? Our monetization, even at scale, is going to be 1/3 to 1/5 of China, which is, by the way, 3 to 5 years away, even to get to that scale. So I think that is the comment, but I'm very bullish. In fact, I believe 2016 in particular is going to be a great vintage to invest, because 2015, as you know, was a horrible vintage to invest. It was too frothy.
In your tweets, you spoke about entrepreneurs who still haven't internalized the new environment. Can you, get into the specifics? What kind of business models are we talking about here?
Yeah, of course, all the local service delivery plays. Now, let's step back. So my comment was in the light of maybe some companies that are currently already burning, but the companies that were already underway, had raised money, their investors would have kind of made sure that the rational way of doing things had started to happen. What I'm finding is because of the last 18 months, the new entrepreneurs that are coming in, for example, somebody has a business plan and a team and maybe a little bit of a product. They come in and say, we want to raise 5 million. That's ridiculous. You have to raise at that stage, it is 1 million at most. So there is a certain normal way of building businesses. As the environment turned and there was a lot of land grab, there were certain steps taken, which by the way may seem irrational. I can also argue that they were rational because you don't want to lose market share to the global guys, right? So certain steps were taken, which in that environment made sense. If you are getting money at zero cost, if you have 0% interest rate, for example, on money, you should go and do some stuff with it, right? Now, once that environment changes, then you have to react to that. These companies have reacted. Unfortunately, and which is why I'm very happy to be having this discussion with you, Chandra, is that it hasn't fully sunk into the new breed of entrepreneurs. So they are still coming with a lot of stage mismatches and coming and asking for $20 million rounds and building their businesses assuming $1 million burn is fine, as opposed to thinking about a $6 to $8 million round and building their businesses accordingly. To answer your second question, tons of businesses got funded that shouldn't have gotten funded, and we may have done some of that. I'm not saying that we are holier than thou. So negative gross margin businesses, local delivery businesses, essentially there was a land grab where growth at the expense of unit profitability. Now that often happens, and you know what, in certain cases it's still okay as long as at scale your unit profitability works. What was happening was that you had business models getting funded where even at scale the unit profitability doesn't work, right? And a bunch of these local logistics types of businesses, local delivery businesses were fall in that bucket. You had mentioned earlier about e-commerce. It is, I think all of us wonder how that war will play out, right? And every day there is a new article about that. There also it's unclear, is there anything beyond discounting that will win, and therefore how much amount of capital will it take?
All right, Avnish, that was pretty comprehensive, but I have one last final question to ask you. Would we still be having this conversation if the China crash hadn't happened?
Yes and no. So for the bigger business, so at least as far as we are concerned, you and I would be having this conversation because if you look at our track record, after February of last year, we didn't make any large investment. The only investment we made was probably Tiny Owl. But actually that was even prior. So we didn't actually we felt that the environment was too frothy. And so all of last year, we didn't participate in any Series Bs, any Series Cs, didn't even write more than a $3-4 million check upfront. And instead what we did was we started going earlier, doing some select seed investments and said, let's ride out this phase. So we would have been having this conversation. I would have been much more worried because I would have felt that maybe I'm wrong and we are sitting out the market and maybe we need to participate in it. So I was very happy when the bubble burst. But the worst thing that would have happened is that a lot of the bad practices would have become even more ingrained in the DNA. And then it's like toothpaste coming out of, it's just very hard to put it back in, right? So it just becomes much, much harder to course correct. So in some ways, I truly believe, by the way, that this is the best thing that could have happened for the country. We have a fantastic market opportunity. We are going to create a number of billion-dollar plus companies. Unicorn will be a good word in India over the next 5 to 7 years. But we need to build it correctly and not just go, I can't think of a better word than say piss away money.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter @ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.